It is the beginning of a new month. It's June 1st. Today we're going to take a look at some of these longer term trends and just study a little bit of candles and see what they're telling us. I am your host, the Cowboy. This is Elliott Wave Cafe and Charts of the Day. Let's get started. All right, we're going to begin with the equities, with the indices here. We're taking a look at the SP 500 on a monthly chart. Pretty interesting close. I would argue, right? It opened and it closed in pretty much the same location. Made a little bit of a high in there, came back lower, scared everybody out at about 3,800, and here we are pulling back. So I would read a pretty decent signal into this one. It was a nice rejection of lower prices. It doesn't tell us a whole lot about, what's going to happen next with a high degree of confidence in here. What I would like to see in the S&P 500 over the month of June, I would like to see a bullish candle, and that would be a candle that would probably engulf, just looking a couple of months back. So if this was a month of May, let's take a look at the month of April, and I would like to engulf that and go at least all the way back up there where you see a nice cluster of candles right there. If we can do this in the month of June, I think that would indicate that it's possibly that we're going to move to new all-time high. So that's kind of what I want to see. So it's an encouraging sign with the fact that we kind of stopped and we didn't close on a fully bearish candle. But I'm definitely watching on the downside. If we're going to take the low of this candle, things are going to start to look problematic, and more than likely we're going to go and attack this 3460, where we have the 50-month moving average, which overall kind of tracks the prices pretty well in terms of value. So that's where we are on the S&P 500. Going down the slides here, we're taking a look at the Nasdaq 100, which looks fairly similar. Not such a strong close as the S&P. Nasdaq was a little bit weaker, although if you look at it, it's a little bit closer to the 50-month moving average. That's kind of supports the prices on the way up. So still in a pretty decent bull market in here. And just on a similar story, I'm looking to see if we can stage a little bit of a bullish advance. I want to see a little bit of a white candle to start to confirm a rejection from lower prices. So you can see, right, that's the support right there. We never really kind of got to it, but it was a zone where previously in the middle of 2020, the markets were kind of trying to create a little bit of a floor there, and the markets kind of came and retested that area right there, and we kind of closed back above it. The last thing I want to see, it's a break below those levels, because that things are going to start to look a little bit uglier to the downside one more time. So that is Nasdaq. That sits right now at about 12,540. So we'll see if we're going to continue with the recovery in here. If we're taking a look at the Nasdaq composite, it's a very similar story. So these are the larger market, 3,700 stocks in here. Pretty close to the, actually a little bit even closer to the 50-month moving average. So this kind of showed you that there was a lot more sell-off, a lot more, stocks that kind of got damaged in the higher composite. The 50-month moving average sits at about 623, and these lows here were about 11,000. So again, just a similar story. We're trying to see if we can get a pullback in the month of May. We're still remaining in a pretty strong downtrend for right now. Let's take a look at the Dow Jones. Dow Jones was, one of the strongest in here, since it's got, a lot more stocks that were not necessarily tech and discretionary in here. So we have some energy, we got some financials, we got stuff like that. That's been holding pretty well, and also consumer staples, things like that. So you could see, just like in S&P 500, a pretty interesting, almost like a doji type formation. Right now we're trying to, see what the direction is. We're probably going to find out soon enough. Usually in the beginning of the month, you're going to find the lows or the highs of the month. So interesting to see here over the next few days. Maybe the market are waiting for the inflation data, which I think it's coming next week. So I hope we just don't stay in a very, very tight range until then. But this is Dow Jones Industrial, and if this was a pretty nice rejection of the lows, we're getting a bullish June. We can push higher. A failure would be a break below this candle, which at the moment sits up into these levels, and then you have a big support coming a little bit lower. So 28,995 is the level to watch. So 29,000, which is another I don't know, 34. So another almost $5,000 drop, a 5,000 point drop into the Dow Jones to kind of get all the way back there to that zone. So we'll see if the markets are ready for that. That's Dow Jones Industrial. Here is the Russell. The Russell was a little bit weaker again, just because there's a bunch of small caps, mid caps in there, and you're coming back in what seems to be almost like a 5-wave decline in here, and you're being blocked by this 50 moving average, 50 period moving average, 50-month moving average, along with some horizontal support back in here. It's what we call a nice confluence. This is the 50, this is the support, and we've been rejected. So when you see situations like this, it's a pretty good bet that you're going to get some kind of a bounce. We'll see if it's going to get sustained or if the markets will try to get back and close below these levels. If they close below these levels, that's a dangerous sign that could tell you that there's probably, more sell-off coming, maybe back towards somewhere up into these levels back there, about 135 into Russell 2000. Bitcoin has closed the month. It's a mixed picture in here. You've had a pretty big sell-off. You kind of pulled back about halfway through this candle. It's not a very, very strong candle, although, you do have a wick from the lower side and not from the upper side. This usually means that you have a rejection of lower prices. It's not as strong as the one in March of 2020 was, but if we're managing to see a little bit of a bullish candle, a little bit of an engulfing month of June, let's say, something like that, then I could say with more confidence, if we're breaking above those levels, that possibly we're going to continue to push higher. The 50-month moving average sits just slightly below at about 21,514. So you can notice all the markets have pulled back to kind of the same averages overall on the monthly time frames. So something a little bit here, but I'm not, let's say, strongly encouraged by the way this kind of candle closed in here. One of the good signs is the fact that it did not close below this swing lows in here, so we were able to kind of close back above it. That's the 30,000 kind of dollar level that got tested in the beginning of 2021 when we first had the major sell-off in there from 65 or something down to 30, and then we made a new high, and then here we are coming back in what looks so far as a 3-wave decline. So I'm not going to talk about 8-wave today, but that's kind of what we're looking for right now. This thing could always become a 5-wave move. If you're selling lower, then this becomes a much higher chance that this would be a 1, 2, 3, 4, and 5, and you can find yourself, if this kind of travels aggressively lower, you can find yourself back towards 12,000 to 15,000 zone if this move accelerates to the downside. For right now, we've been rejected. I think this is an important low. It's probably going to get, support there, probably going to get tested maybe again. We'll see what happens in here. I'm going to take a look at the daily charts too. But in terms of a, daily time frame, it's not as bearish as the previous one was, the month of April. So decent pullback, but I need to see more in the month of June. I'm looking at TLT. So this is the 20+ year Treasury bond. This one was quite aggressive here. We broke below the 50. This is a market that took a lot of people by surprise, Bonds are supposed to offer safety when your stocks are selling off. That's why you have those 60-40 portfolio, 70-30, whatever, depending on your ages. And we've sold off. I mean, this move, so far, it seems like a 3-wave pullback. The uptrend is still kind of ongoing. I would argue that this is, a major swing low that would have to get taken out to start to consider a reversal in bonds. So bonds continue to sell lower and then interest rates to go higher, obviously, but you're probably going to come back here, then create a pullback. You're going to create, this is the left shoulder, you're going to have a right shoulder, and then the bonds can sell off again with interest rates pushing higher. So we'll see here. We're looking at the TLT that's kind of selling off. You've had an increase in interest rates. I think that there could be some interesting buying opportunities in here based on these on this level of support. We'll see for how long, but it's something definitely to watch. RSI is here at about 31. I know a lot of people are looking at the bond market, and see if you're going to get a slowdown in interest rates. So here is the 10-year Treasury yield, It's the same move on the opposite direction. You're going up in a down in B, let's say, right, and another move here up in C. Maybe it's a 1, 2, 3, 4, one more push higher in 5, maybe attack those highs one more time. We're trading at about 285 on the 10-year, you know, big resistance right there. See if we can kind of start to pull back from those levels. This is going to have to do a lot with what's going on with policy from the Fed. So, but you know, for right now on the monthly time frames, I'm not seeing a whole lot. Just a little bit of a, let's see, a little bit of a blip in here. But the market has been very, very strong. It's nothing that I can, you know, really put my, you know, hang my hat on and say, yeah, you're going to sell lower towards 2%. You know, maybe we need another month of weakness before that can happen. This is a bit of a trickier market. The dollar instead, you know, created an inverted hammer in here. You could say that it's, you know, pretty strong. You are, you've been rallying here about 104, 103.5. You went all the way up to about 105 in there, and we closed back below it. So this is pretty much, you know, a bearish reversal. If we're getting another month that looks pretty bearish in here, then we could say that there might be some more declines kind of coming in the dollar. But this is an encouraging sign. On the smaller time frames, this looks like a pretty good impulse, and I'm going to watch to see if I can sell the dollar against this this rejection of this higher price. I've been talking about the dollar in my newsletter. You know, you guys are welcome to check that out, the Pigeon and the Statue. I'm going to put a link in here. So, you know, I kind of do markets review at the end of the week and just kind of give you my thoughts for the next week and kind of what I watch, you know, what I'm trading, what I see kind of opportunities, and kind of how I'm judging these markets. Today, just because it's the beginning of a new month, I'm just going to go through this monthly charts in here. But dollar has been on my radar for, you know, for a while, ever since we were starting to break back in here. You know, I kept talking about, I don't think this is going to be, you know, much sustained. You know, based on kind of what we see overall in the economy. Gold, it's, you know, it's a messy market. Doesn't give me a lot of read in here. I think this was important high back in here. I don't know if this is going to get challenged. Maybe not even this year. I see this just as a kind of a three-wave move higher. Not much really. I mean, it could still be maybe some kind of a larger triangle. It's a very, very messy market, but I just don't see it. I just don't see it bullish. So, you know, for me to kind of convince me, I would have to see a couple of bullish months that would close towards the high of this range and almost threaten a breakout, right? Something that would look like this, where you would start to go like that, and then you would have another one back in there, and they would both be bullish, and almost like, you know, okay, this is my resistance, the market is starting to go in. That would be maybe a wave 1, a wave 2, and then you're thinking, okay, you could break higher. But for me, gold is a wait and see game. It's nothing to do there at the moment. Now, I have a problem with the oil market. This one, I'm shorting it. I've been shorting it here a couple of times. I don't have a high degree of confidence that this will continue to push lower. I think these highs here were very important. I doubt they're going to get challenged. You know, they might, and I just, you know, I eat my words here. I think this was an important rejection candle. I think we're somewhere into the kind of a peak mania when it comes to energy and inflation and energy prices, and, you know, I mean, I was at Costco yesterday, and I mean, the line up there is insane. I mean, this pump has 1, 2, 3, 4, 5 or 6 lanes. On each one, there's like 2 pumps. So there's cars everywhere. And I'm like, you know, I know the price is a little bit cheaper, but, you know, what's going on in here? And I've noticed the same when we've had this spike in here in oil. That was exactly the same. I actually called my brother and I said, man, short oil, because this is not looking good. I think, you know, we're gonna come back down, and we've had a pretty decent decline back to 100. I think we're in a similar situation now. This monthly close is not as bearish, but I'm looking at this as almost like a setback against this decline, and I think we're going to do something like that next on oil. So that's where my thoughts are on WTIC. IFA, these are, you know, the markets outside the United States with a nice rejection from this back in here. You can see this is very, very similar to what's going on in the Russell 2000 as well. So we tagged the 50-month moving average. We closed through a nice bullish hammer in there. And with the dollar weakness, these markets could possibly recover. So I'm going to watch what's going on in this month of June and see if we can get a bullish candle all the way back up to there. So see, all I'm talking here, I'm not even looking at counts. All I'm talking is price action. I think price action is one of the most important things, somewhat underrated. What's going on weekly, what's going to go monthly, what the candles are telling you. The Japanese candlesticks analysis, I think it's important. It tells you, where the buyers are, where the sellers are, how much power they have, what are the levels. I think sometimes just kind of keeping a clean naked chart on candlestick can go a long way. So and here's VIX. VIX is on the monthly kind of close in here. It's been a pretty messy, right, month of April. This was when VIX was very, very powerful with a lot of sell-offs in the markets continuing to the month of May. And then we kind of closed off back towards 25.69. This is obviously a range-bound market. It's never going to trend. You've got, levels where people are scared, levels where people are very, very complacent, and then somewhere in between where you have somewhat of an equilibrium in the market. But I think overall, if we're able to drop in the VIX below 20, I think we can go into a different regime, something that's a little bit, easier on the markets. And I've showed you yesterday the VIX of the VIX, the volatility of the VIX that was very, very, low in here. And I think the markets are probably going to continue to kind of die in here over the summer and not create a huge, volatility spikes as we've had before. Here we are, 15 minutes. I want to quickly go through the daily time frames. In here to the S&P 500, pretty good impulsive rally. This could still be a quick fourth wave, 1, 2, 3, 4, maybe another wave up in 5, and then a correction lower. I think this is a pretty good impulse. We're looking to see if we can stage another advance higher like that in that X wave. I talked about it yesterday as well. 50-day moving average kind of continuing to decline. Today's sell-off was okay, but nothing to really write home about. They're going to try to kind of scare you every once in a while and say, oh my goodness, you're going to new lows. Listen, you've climbed, what is it, almost 10% here. So a little bit of a pullback should be kind of welcomed in there. I'm looking at the Nasdaq again with a pretty strong rally. 1, 2, 3, a 4 here and a 5. I think makes total sense. You're above the 21-day moving average. That's a reverse in the short-term trends of the market. If we can sustain this, if these levels can hold back there on a retest, right, that's important, and that would tell us that the market might have a little more upside to go in there. So that's the Nasdaq composite also. It's on a similar story in here as well, above the 21-day moving average on a declining market still. So don't forget we're in a downtrend. Dow Jones, even spikier, even stronger above the 200, above the 20-day in here. Again, maybe another push higher into the 50, and then a little bit more of an appropriate pullback. I don't think you can sustain, this level of kind of continuous climb. You would have to have some kind of a extremely bullish news from the Federal Reserve or something like that. But I would expect, something like that maybe over the next couple of weeks in here, and then maybe push back to the upside. So we'll see. And then Russell has a little bit of a different picture. Why? Because it looks like a three-wave advance only. You can see in here, you go up, you come back down, and then you go back up, right? So it's more of a three-wave into the 50-day moving average. So unless this is some kind of a 1-2, 1-2, and you're breaking higher, this is not a very encouraging pattern so far. I'm going to be watching the swing low back in here. That's important. If you break back below, this gets confirmed as a three-wave move, and then you can continue lower, and also watch the 21-day for support. That would be, to me, some levels where you can actually take some trading positions to the upside. If you're above it, if you're below it, you got to get out. Bitcoin climbed back above the 21-day moving average right here. Very nice towards 32,400. Actually, we were long in the pro room. We opened up a long. There was a little bit of a pullback right here on the smaller time frames, 1 hour to 2 hours, right there at about. I think we opened at about 29,350. So we took about a 50% profit of the entire position. And we let the rest right higher. We kind of tighten up the stops. We moved the stops above just at about 30,000 level, and we got stopped out to the remaining of the position. So now I'm out of Bitcoin, but we did enjoy a pretty good gain from here of almost 9% price climb in here into this move. And this is kind of what I was looking for, because you never really know if this is going to be just a three-wave move or if it will continue up in a 1, 2, 3, 4, and 5. So for right now, we're pulling back. I don't think we're fully we're fully bearish just yet in Bitcoin. I'm waiting for if we're going to get a break below that level on a shorter basis here. If we break below that, I think things are going to get a bit uglier. But again, it's probably just a little bit of a scare today. Come back into this 20-day moving average. If we can manage to kind of climb back above it, this market could continue to correct higher into a declining 50-day. I talk in the program about the counts, about what this is, kind of how we're counting all of this and what's longer term, and that's something that we do every day on the Bitcoin channel, on the daily videos there through our updates. TLT, not much here on the daily, just a little bit of a pullback. So again, a jump in rates, bonds kind of selling off a little bit in here. Can't really put my finger on this price action right now. It does look just like a corrective setback, so there might be a new low coming. And here is the, here's the 10-year yield with the touch of the 50-day moving average in here, turning higher at about 285 right now. The high was 312. So, for this to kind of get more traction to the downside, you would have to reverse from here and create maybe a leading diagonal, and then with the push lower. And then the dollar, it's stopping at the 50-day moving average. This is important. I talked about this in the program as well this morning, because it's normal now that you've been correcting, or at least selling off, right, impulsively from this highs to this lows. Why wouldn't I have an expectation that this could be followed by a little bit of a setback in here, maybe back towards 21, 50%, 618, and then look for the next leg lower in the dollar. But so far, as long as you're above the 50, this still remains as a pretty good uptrend. Gold, nothing here. It's above the 20-day. It's below the 20-day. So it's a messy market. I have no interest in really thinking much above it. Maybe if we can get a 1, 2, 3, 4, and 5 up here, then I can get excited. And then here is the rejection in oil. I mean, this gets me excited. We actually opened short positions in the market today in the pro room, and shorted oil based on that rejection. A little bit of a pullback back in here. I think we shorted 117 something, so we're already doing pretty good in there. But via futures, I mean, you can short this, I don't know, USO. There might be some other vehicles in there. I don't like to touch those because those ETFs don't really track tick by tick what's going on in the oil market, so I prefer futures. Forward slash CL is the ticker on the large contract. I think that could be a little bit too much, but forward slash MCL is the mini contract on the futures platform, and you can find those on TD Ameritrade, Thinkorswim. Fidelity doesn't offer, but you can also look at Tastyworks platform. It's got also futures. So and I'm pretty sure a few other brokers as well, where you can kind of take advantage of trading, oil, corn, gold, Forex, Euro, even Bitcoin futures, whatever. And people are scared of futures, but I don't know why. I mean, it's such a simple, clean way of expressing your direction in the market, and they have mini contracts, so you don't have to put a lot of margin, I don't think they're as scary as some other people might want to think, or want to make you think that they are. I don't think so. So just got to be cautious and just have your stops, know exactly your plan, where you're going to get out, what you're looking for, how much of a move, and then it's a directional move. Boom, might be 2 hours, might be 2 days, might be 2 weeks that you're in that trade, and then we'll see what happens. So anyway, I'm looking for this oil to kind of start to break lower in here, start to come back towards this moving averages, and ideally I would like to see it maybe somewhere back towards this trend line back in here as it's moving. But I think this move, it's to me, in my view, it's a pretty messy, B wave or X wave or whatever you want to call it, and it's got a big chance that it will probably going to come back in here. I mean, guys, listen, people are going nuts about the oil prices. It's going up every day. This is going to go, what is it going to go? To what, $10 a gallon? Like, why? Do you think, anyway, I don't want to get into any political discussions. So here is IFA, 1, 2, 3, 4, 5, maybe. We stopped at about the 50-day moving average. Not much to do here yet. I might be buying this on pullbacks if the dollar continues to kind of give good signs, and then VIX It's coming back here at about 25.69. Again, I'm looking for this level in the VIX to be kind of taken out and you know, for this market to kind of sell lower and start to attract 20. That will mean that we're coming back into a different range, right? You have this range right in there. That's pretty high volatility, you know, a lot of sell-offs, a lot of drama in the markets. The moment you move back in here, things start to calm down a little bit more. So I hope this was helpful, guys. I mean, let me know what you think. If you like these videos, if you want me to keep going, if you want me to stop, give me some ideas, what else you want to see. You know, give me a thumbs up. And, you know, share it around, hit that like button as well. And come visit me in the pro room, in the public chat, on Twitter. I'm at Elliott Cafe on there as well, pretty much everywhere. So I'll talk to you later. Love you all. Bye.